Okay, so there's one question that I get asked time and time again as a trader, and that is, what strategy do I trade? And if you guys don't know already, I primarily trade futures, but I became consistently profitable trading forex over my past 6 years. And there is one strategy that I've used for that period of time that has made me consistently profitable and makes my trading so much easier. Now, if you guys have watched the previous videos, you'll know that I trade something called the box strategy, which uses an AMD cycle, but I still get so many questions regarding how I trade this, questions about the setup presenting itself, how mechanical it is and all that stuff. So in this video, I'm going to explain the whole strategy that I use step by step, the one that's made me thousands trading prop firms, so that you guys can go away and trade this for yourself. And as I said, the goal of this video is very, very simple. Firstly, I'm going to show you the 3-step mechanical system that I use every single day on both eurusd and gbpusd, and then I'm going to show you some live examples that I've taken on the charts with proof, so that you guys can see how effective this strategy actually is. So without wasting any more time, let's get straight into the video. Okay, so before I go into the actual concepts of the strategy, I want to just go through 3 of the top reasons that I found why most traders actually lose money. And it is very, very simple. And there's an explanation for all 3 of these things. And the reason I'm saying this is because this strategy is actually going to help out all of these things that you're feeling right now. So the first one is fear of losing. And I understand that most of you guys are afraid to take trades. You're afraid of being in drawdown. You're afraid of your stop loss getting hit, especially with funded accounts, because there's boundaries that you can't touch and there's goals that are set. You know, you guys get so scared of taking entries. And the simple reason behind this is you don't have a strategy which has predefined steps. You don't have data that gives you confidence in your actual setups on a day-to-day basis. And that is why watching this video right now, you're going to develop a strategy that you can use every single day with confidence. The second one is taking low probability setups, and this really goes hand in hand with the first one. The only reason you're taking low probability setup is one of 2 reasons. 1, you don't actually have a strategy at all, or 2, you're adding too many confluences together and mixing up overcomplications with refinements. So in this video, I'm going to show you the 3 concepts that you're going to be using. It's 1 market cycle and 3 very specific concepts that you can use every single day. These steps are predefined, so it's mechanical in a sense, but it still requires a little bit of discretion. Now, the third one, and I was so guilty of this when I first started, and that's failing to hold winning trades. And this is whether you take early winners or you take losers, you know, when you're a little bit of drawdown. Whatever it is, there is a simple solution, and that's having fixed risk to reward and having confidence in your data. So all 3 of these things go hand in hand with each other, and I guarantee if you're watching this video right now, you're experiencing 1 of 3 of these things at least. So let me explain what the actual concepts of this strategy are in very, very simple terms for you. Now, the strategy itself uses 3 very simple concepts, as I've said: accumulation, manipulation, and distribution. But we've got to break down when these are happening and when to actually position ourselves in the markets. So firstly, accumulation is tight price action. You know, we're working, we're consolidating, we're in a tight range, there's orders being filled left, right, and center. Price is not doing anything at all. As you can see, we can break out of these things, form a range, whatever. But this is effectively accumulation. Now, it won't look exactly like this on the chart. There is variations of it. But all you need to know is it is a build-up of liquidity. So it's building buyers, it's building sellers, and they're all getting their orders placed within a very, very tight market. And the actual session that I use for my accumulation, or my box as I call it, is actually Asian range. So I use Asia as my box or my accumulation phase. Now, the strategy is based off manipulation and distribution, so it's taking out early buyers and sellers and capitalizing on the momentum in the opposing direction. And this brings me on to the manipulation phase, or the liquidity sweep. So as I just showed you, we have our accumulation phase here. And then what happens is our manipulation is taking out the orders at either the high or the low. And because this is a mechanical strategy, it doesn't really matter what direction it takes. All that matters is we get a strong displacement to either the upside or the downside. So for example, in this case, we've taken out these highs. So as you can see, all the liquidity that's been resting on these highs, so here, 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 and here, has all been taken out by this manipulation leg here. And a lot of you breakout traders are getting caught up in this. You think that, you know, just because you break out this range, you just instantly click buy and that is it. You think that you're going to be off, but this is usually a manipulation leg. Now, don't get me wrong. If we're strongly bullish on the charts, you can simply refine this and we can have continuations to the upside, but that requires other strategy confluences and stuff, but in this video I'm going to show you how to catch the reversals, because that's the one that I use on a day-to-day basis. Now, the third area, which is the most important factor, is our distribution phase. So again, we've got our accumulation. We then manipulate to the upside, as I've just showed in the photo above here. So we've taken out the liquidity, we've faked out to the upsides, we've taken out all early buyers or sellers, and now we simply need to capitalize on the manipulation up the distribution move, sorry. So this is our distribution or our expansion, and this is usually where we've taken out our area of consolidation, we've manipulated, and now we go in the true direction which price wanted to go. And then we head for, you know, higher time frame POIs, external liquidity, swing highs, swing lows, whatever it is. But that is the strategy on a whole. And I know that one of the most common questions I get asked in the comments or in our free Discord is, the cycle that you use is brilliant, I see it playing out all the time, but I simply don't know how to enter. And I use two very, very simple steps and two very, very simple indicators, which I'm going to show you both of them things within this video, so make sure you stick around. Now, the first thing I use is a market structure shift or a change of character, however you know it as. So as you can see here, we have high, 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 low, high, 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 low, higher high, higher low, higher high, and then we've now formed a lower low. So it doesn't take a genius to know that we've broke the trend to the downside now and had what we've called a market structure shift to the downside. This is the first sign of a market reversal. A market structure shift with momentum, it's got to have momentum, is showing that we are going to reverse and flip to the opposing direction. And this is why this strategy is so valuable, because we have our accumulation, we then manipulate to the upside or the downside, and then we push to the downside and have a market structure shift in the opposing direction, showing that we want to go in that direction. So we just have to capitalize on it. It is as simple as that. Now, the next question I get asked is, one, how do you enter? Which I simply use a fib. And the second most common question that I have got asked since starting YouTube is, what are your fib settings? So I'm going to show you in this video, because I use a few different ones, but the one I use most commonly is going to be in this video. So I simply use the fib tool to enter because it gives me a mechanical execution point. I don't have to think and wait for engulfing candles on different time frames and inverse fair value gaps and all that stuff on Forex. I simply use a mechanical entry. I put my stop loss above the highs and I aim for a simple 1 to 2. But as I said, I'm going to show you all of that within this video. So what does the setup look like on a day-to-day basis? I look for the same thing every single day. So as you can see here, these two lines that you can see are London open, so 8 AM. As you can see in all of these, I wait for 8 AM. That is the time that I'm trading. So I trade from 8 AM until 10, and that is British Standard Time. And as you can see, we've got Asian range here. So this is our box, our accumulation. We're making, you know, tight consolidation of price, you know, we're ranging very tightly, and then I wait for a manipulation. So as you can see, we have now taken out these lows here, manipulated to the downside. We've then had a market structure shift to the upside. I've waited, I've drawn my fib from the low to the high. We've come back down, I've entered on the fib level, and then I've had a fixed 1 to 2 with my take profit at the swing high or low. Tuesday again, we had our box. We've manipulated to the upside. I don't enter until London open. We had our market structure shift here with momentum. I draw my fib from the high to the low, wait for a retracement, entry off my fib level, target the lows. Again, Thursday, Friday, I look for the same setup every single day. It is such a simple setup, and I get so many comments saying, well, your strategy must be too simple. There is nothing wrong with simple at all. Simple and effective means longevity, and longevity equals consistency and repeatability, and that just equals a fuck ton of money. So obviously I'm going to use it. I'm not looking for all these complicated strategies, you know the RSI is crossing 30, the MACD is doing this, and moving averages are doing that, and I need to look for this and this. No, I have three very simple steps. I use market structure, and I'm going to show you now on the chart how effective this strategy actually is. Okay, so I've just loaded up gbpusd on the 5-minute chart, and before I actually get into breaking down some of these trades that I've taken live, I want to mention two things. On the last video, I actually got a few of you guys saying that I was simply cherry picking entries, and that it's very easy to spot on previous market conditions, and there's two specific reasons for that. Firstly, I'm not going to sit here on replay and go through the whole chart. And secondly, the reason I'm going to show you these specific trades is because these are trades that I've actually taken live within our free Discord. So if you ever doubt any of the entries that I actually take, there is two ways that you can see proof. Firstly, you can head to our Instagram where I show all of the results of every single trade with both the analysis before I execute and the result. And secondly, we have live trading calls every single day within our free Discord so that you guys can capitalize on these entries as well. So we trade futures in the afternoon and Forex in the mornings for London session. So every single one of these entries that you can see right here, I've got a result, I've got proof of concept, and you can find it within the free Discord or our Instagram. So before you ask or say in the comments, cherry picking entries, just picking out the winners, I'm going to show you both the wins and the losses that I've taken throughout this past 2 weeks worth of price action on both gbpusd and eurusd, so you can see how effective the strategy actually is. Okay, so I'm going to just show you the first entry that I took, which was on the 17th of July 2026. Now, before I get into this, there is two very, very simple indicators. The first one is Fractals by Rachel T. And these are the actual settings that I have. So I only really have the top one showing. Everything else I've just got pretty much invisible. So I just have black top fractals and black bottom fractals. So as you can see here, it's printing fractals on my chart. And that's for a very, very specific reason. So in this first example here, as you can see, we're capitalizing on reversals. So we're trending to the downside here. So as you can see, we've got our high, our low, lower high, lower low, lower high, lower low, lower high, lower low. That is simply a downtrend. It doesn't take a genius to figure out that we are in a downtrending market throughout this specific session. But as you can see here, this was our last fractal to the upside before we actually pushed down and shifted to the upside. As you can see, if I just zoom in here so you can actually see a bit better, the fractal here actually broke to the upside. So we had a market structure shift to the upside. We had a solid body close and we had momentum. So now all I simply needed to do was use my fib. I'd drawn it from the low to the high because we're in an uptrending market, and I simply executed on the 0.618, so right here. And then I targeted a fixed 1 to 2. So my stop loss just below the lows with 10 pips, my take profit at 20 pips, which you can see absolutely smashed take profit. We had a little bit of drawdown at the start, but that is completely expected. So that was the first entry. Now, the next day, we had a shift to the downside. This wasn't as good of an example. So we had a sweep of Asian range liquidity here. So we took out the previous session high, very, very mechanical, and we had a shift to the downside. Now, don't get me wrong, this wasn't the greatest shift of all time. As you can see, we were moving to the upside and we broke the last fractal. So I marked a market structure shift here. Let me just mark this out really quick. And then I simply drew my fib from the high to the low here. Entered off the fib, experienced a lot of drawdown on this actual setup, but again, this was a winner in the end. And the reason that I actually had my stop loss at this point was just to clear the previous daily high because we were working so close to it. Now, the next entry that I took was a super, super clean entry. And this is a great example. I don't know why the entry's actually disappeared. Let me just get it back up. This was a super clean mechanical entry. So as you can see, we were shifting to the upside. We were moving in an uptrend, higher highs, higher lows, and then we had a shift to the downside with momentum. So as you can see, we had a really nice displacement to the downside, breaking not just this low, but this low as well. So that signifies a really, really strong shift to the opposing direction. And then we've simply, again, drawn our fib from the high to the low that caused the shift. So this specific low right here. Waited for entry off the 618, executed with our stop loss just above the highs, and then our stop loss, take profit, at Asian lows. And as you can see, we absolutely smashed take profit. Again, another entry. Next entry, bit of a risky one here again, but you can see how mechanical these steps actually are and how I just don't have to think about it. So again, we were trending to the downside. We flipped to the upside with a market structure shift here. We took out the previous session low. And to be honest, I wanted a better move off this actual entry, but it still played out in the end. So as you can see, I drew my fib from the low to the high again, took this, and we were in consolidation for most of it, but we actually did hit take profit in the end before coming back down to break even. Now, the next entry, again, As you can see, we had London session here. We then had London session low, swept the liquidity, also swept the previous daily low. Strong displacement to the upside here, so we actually shifted right there. We draw that. Fib from the low to the high. And again, our entry on the 618 with a fixed 1 to 2 risk to reward. So if you can see this 17 pips on some, this is because I actually took out at this area. And the reason is very, very specific. We actually have higher time frames. So if I go on like the 30-minute, for example, we'd actually have a fair value gap here. That is simply why I'm taking out these entries. Very, very mechanical. I usually take a fixed 1 to 2. But some entries, depending on timing, I do take out earlier. As for the next day, again, Asian range, we shifted to the downside. Not a great shift, but a retracement into a fib here. Let me just draw my fib right there. Again, fib 0.618, absolutely smashed TP. Again, our next entry here, we had a shift to the upside with Asian range. We actually took out this area of accumulation right here. So again, box strategy, AMD cycle. You can see that we have our accumulation, manipulation, and then we capitalized on the distribution right here. So as you can see, shift to the upside, retracement into the fib, take profit hit. I do this on every single entry, every single day. It is the same thing every single day. Again, market structure shift to the downside, draw my fib, enter off the fib to the downside. Again, an entry here, shift to the downside. I actually hit stop loss on this one, so I had my stop loss set to the highs, and unfortunately I took an L and it did eventually deliver. So in my journal, I know to give myself more clearance and go with, fixed 10 pips or whatever. Second day, exact same thing happened, funnily enough in the exact same area. I actually took a loss again. So as you can see here, we had a market structure shift to the downside on the lower time frames. I entered off a fair value gap, but it was also a fib retracement as well. And actually hit stop loss before it actually delivered to the downside. And then obviously we had FOMC yesterday, and then again here another mechanical setup, and unfortunately we didn't actually reach our entry area. So as you can see, we swept Asian lows, so this was our accumulation right here. We then manipulated to the downside, sweeping that liquidity. We had a nice strong displacement to the upside, as you can see here, which is just a whole position in itself. And then for New York, I was actually looking for us to retrace back down into the fib and take a long position from here, just simply targeting London highs and then stop loss below the lows. But we didn't actually retrace into the fib area, so I didn't take this entry. So I hope that has cleared up how simple the strategy is that I actually trade. I've used it for, like I say, over 5 years now, and it's what's made me consistently profitable. Once again, if you aren't in the free Discord already and you want to join our live trading sessions, make sure to click the second link. And if you're wanting to work one-to-one directly with us, make sure to click the top link in the description. We can go over some of your bottlenecks and see where you're at right now, see if there's any refinements that you can make within your trading journey to become consistently profitable. I hope you've enjoyed the video. Make sure to leave a like, subscribe, and if you have any comments at all, make sure to leave them and I'll be replying to every single one of them. But that is going to be it for this video, and I will see you in the next one.